Hi, this is Doug English with Active Advisors with your November 2022 update. Well, the stocks and the bonds continued to rally in November of 2022, with the S&P 500 returning about 5.5% for the month and the bond market returning about 3.5% for the month. As you may have noticed in the last month's video, I talked about what the Fed might do. And the market has been hoping for the Fed to slow down, to notice the disinflationary data that's being reported all over the economy, and to say, okay, we see that data and we're going to slow down our rate of increase. Well, that's exactly what happened, and the markets have been rallying on the backs of that data. So you can expect that in your account, you're going to see an increase somewhere in between those numbers, depending on how aggressive you are. Those of you with more money in bonds be closer to a 3.5% return, more money in stocks be closer to that 5.5% return. So 2 months in a row of regaining some of your principal that was lost earlier in the year. Very, very nice to see. I know you're happy for it. So what comes next, of course, is the Fed has slowed this economy down by increasing rates. And now the question is how much does it slow down? And at what rate do things decrease? Does it potentially go too far and get into a shallow or even a more significant recession? That's an issue for 2023, and one that we'll be paying very careful attention to. As you know, the yield curve is inverted, meaning the short-term rates are higher than the long-term rates. So that puts the brakes on the economy. That slows things down. And when that happens, the yield curve inversion predicts every recession in history. In fact, sometimes it predicts a few recessions that never actually occurred. Point being, the yield curve is very inverted right now. So it's likely that we have some form of recession next year. The question, of course, is how much? So as you know, we've been running these rotations inside of your account since February. We've got a bond rotation. That rotation has been in a cash-like position, earning a nice rate of return while we're waiting for this activity to kind of take hold and see some momentum. And that position has gone 1/3 into municipal bonds at the beginning of December. The stock rotation has also been in a cash-like position, but it has gone entirely into mid-cap stocks, again, as of December 1st. So you'll see those changes into your portfolios immediately. And if the seasonality that we usually see in the fourth quarter, and particularly December, continues, hopefully I'll get to make you another one of these uplifting videos in just a month. Thank you very much for your business. If you have any questions, please contact us right away at Active Advisors.